So good morning, everyone. Welcome back to day 4 of the International Conference on Inclusive Insurance. Welcome, Craig Churchill, the facilitator of that session, and thank you very much to the panelists for participating. Today's day will talk about new products and solutions to increase insurance outreach, and I'm very excited about this first session that we were putting together. The steering committee of the conference was trying to put together a session on remittances since a number of years, but we were never getting very good results and good proposals. And this year, we're very happy to have a session on remittances. So thank you, Craig, for facilitating that session. And I hand over the microphone to you.
Thanks, Dirk. So good morning, everyone. I'm Craig Churchill from the International Labour Organization's Impact Insurance Facility. And I guess it's not morning for everybody. It's morning for me, and it's probably evening for others. We've got a great panel here to look at the issue of remittance-linked insurance. And when you're talking about remittance-linked insurance, the main target population that you're looking at are migrant workers. And migrant workers, so I work at the International Labour Organization, as I said, and migration is a huge issue in the world of work. There are more than 200 million migrants who go to different countries in order to work. So it's more economic migration because they're due to limited employment opportunities or income opportunities in their home countries. And so they go to other countries to work and send money home for a variety of different reasons, but mostly to take care of family members. And when you think about the money that they're sending home, a big piece of it has a risk protection element in a sense, that the money that they're sending home is designed to support their families in terms of feeding them or educating them. But also whenever there is a risk event, you see remittances skyrocket. So if there's an earthquake or a hurricane, then a lot more money ends up flowing through the remittance channels to the countries back home. And so I think that a number of insurers have really been looking at this and saying, well, this is a flow of money. There's a financial transaction that I can link to, and that flow of money gets used for a risk management purpose. And in that context, maybe it could be even more efficient if we added insurance to that so that you could have a combination of the remittance and the risk protection more effectively packaged. And so in that context, we've found a few organizations that have really invested heavily in this, and we're gonna learn from their experiences. And we've got a great panel. We're gonna start off with Kate Reinhardt from Send-Free in South Africa. Send-Free is a research institute think tank, and Kate has sort of looked at some of the bigger picture issues, more of a bird's eye view overview into this topic with a number of really practical examples, of course. And then we're going to shift gears and move over to Michal Matul from ICIII. And ICIII has been very actively involved in this, and so we'll hear about ICIII's experiences. But then we'll move on, sort of burrowing down even further to Michele Grosso from Democrats, which is a fintech company, because this isn't something that insurers can do on their own. They need to partner with other organizations like money transfer agencies and possibly fintech companies. And so we'll get 3 very different views on this topic at different levels. So with that, Kate, I want to hand over to you and let you dive into the content. Oh, sorry, before, I forgot, yep, sorry, housekeeping items. Okay, thanks for the reminder. So this is gonna end at 10:30 sharp, and everybody will be muted in order so that we don't have too much background noise. So the main message is that if you have a question, please put it in the Q&A component. And if you have any technical problems, that goes in the chat section. So don't put questions in the chat, put questions in the Q&A. The Q is the question part. And then just a reminder, this is being recorded. So if you don't want to be a part of something that's being recorded, then you're welcome to not stick around. But I encourage you to stick around because the content's gonna be really good. Okay, that was the housekeeping, and now officially moving over to Kate.
Great, thanks so much. I just want to check, Craig, can you see my screen? Okay, fantastic. Well, good morning, good afternoon to all. Thank you, Craig, for facilitating this session, and to the Munich Re Foundation, the MIN for organizing this conference. I'm just going to say beforehand, I am working from home because of COVID, so you might hear my dog snoring in the background at some point, or the doorbell ring because my husband is coming back home to also work from home. So apologies in advance. I think this is just the world that we're living in right now. But I'm very happy to be presenting to you on remittance-linked insurance products. My presentation today will focus on what we mean by remittance-linked insurance products, why we see potential for these, and then also touch on the practical models that we see for these types of products, as well as some of the key regulatory barriers. Okay, perfect. So what are remittance-linked insurance products? So remittance-linked insurance products are really just about using a remittance service provider as a distribution channel for insurance products. But it's really actually going beyond just the sales component, but also using them for premium collection and claims payment cross-border. So this is really about connecting remittance senders and receivers, and utilizing these types of channels to do different components of the insurance value chain. I think an important thing to note here is that there are different types of remittance service providers. So they're your typical MTOs like your Western Union or your World Remit, just as some examples. Banks can also serve as remittance service providers. So can e-money and mobile network operators such as MTN or Ola Money. And then there are also post offices that also help facilitate remittances. When we talk about these types of products, I think the real potential in this space is really about partnering with your MTOs and e-money and M&O operators. So I think it's great to just take a step back and kind of reflect on the fact that there are actually already a number of remittance-linked insurance products that exist globally, although they're very, very limited. And I think we're very lucky for this panel discussion to have both AXA and Democrans, who have launched this product that covers remittance senders in the UAE, and they'll speak more to the practical challenges and opportunities that they found in this space. But I think an important thing to highlight here is that there's very limited products that exist that cover remittance senders on the market now that are being facilitated via remittance service providers, and actually none that we've found so far that actually cover the remittance receivers. And I think there's real value when you can work with the M&O or the MTO in order to provide insurance products to not only the senders, but also the receivers. So why do we think there is potential for remittance-linked insurance products? I think that the first point to make is that remittance service providers are actually aggregators of a large number of individuals. There's a large number of migrants who are already sending remittances. For example, I think Craig touched on this earlier, but in 2018, there were 200 million individuals who were regularly sending money back home, which equated to about 530 billion US dollars. That's a large amount of money, and actually that's probably just the tip of the iceberg. There's many more remittances that are going through informal channels as well. So this is RSPs serve as an aggregator for many of these individuals. Also, I think that remittance-linked insurance products offering insurance to both migrants and receivers can build the resilience of these individuals. If we think about sender risk events, senders may no longer be able to send remittances, for instance, when they're faced with an unexpected risk event, such as death, disability, illness, accident, etc. And exposure to these risk events is exacerbated by the fact that many migrants are often working in the informal sector, and often lack access to basic safety nets. I think it's also important to note that senders face income shocks when remittance receivers face a risk event as well, that has a large financial implication and requires senders to actually send additional money home to cover the cost of that financial event. So these types of events are unplanned and put additional financial strain on remittance senders, and we think insurance can play a role here. On the receiver side, remittance receivers face shocks to their disposable income due to normal things like health, life, asset, or business-related risks, which impact their ability to maintain their livelihoods. And when this happens, they often require greater support from remittance senders. And I think it's also really important to note that receivers can face reduced income if senders face shocks and are unable to send money home. So many remittance receivers really do depend on the money that senders face to meet everyday living expenses. Additionally, remittance-linked insurance products can ensure the sustained flow of remittances, and I'll touch on this in a second as I speak to the next few slides. So I think the first thing that I want to highlight here is that these findings are from a study that we did with a digital remittance service provider with senders who were sending to the UK, Cameroon, Kenya, Nigeria, and Uganda. We surveyed about 1,200 remittance senders to try to figure out what they were sending for. So for which purpose were they sending? And would they be willing to send directly to some of these institutions, which we call for-purpose remittances, sending with a specific purpose in mind into a specific institution. As you can see from this slide, actually a large percentage of remittance senders are already sending for insurance purposes. So they're sending money back home to cover insurance premiums for the receivers. So that's 21%. I think when you put this in perspective, for instance, to take up in sub-Saharan Africa of insurance among adults, you actually find that less than 10% of adults in sub-Saharan Africa typically have an insurance product. So this number is actually quite large. And I think it's also very important to note that 84% of remittance senders in this study were sending for health purposes, which is obviously an insurable risk. So they could think about ways that they could actually insure the individual as opposed to just sitting when there's a health shock at home. I think one of the most interesting things from this study, which ties back to my point about this remittance-linked insurance products ensuring the sustained flow of remittances and maybe even increased remittances, is the fact that 21% of individuals in the study also said that they would be willing to send directly to an insurance company. I'm sure that surprises many because we often think, insurance it's challenging to convince individuals that they need it, but this number is actually quite high when you look at things. Additionally, 29% of senders said that they would send more money if they could send directly to an institution. So this is where the business case for the remittance service provider comes in as well. So the point that I want to make here is that there is existing demand and there is a business case for a remittance service provider, which leads me to my next slide. I think that there are clear incentives for insurers and remittance service providers when it comes to these types of products. From the insurers, remittance service providers have an established customer base with customer data. They also already have an integrated channel for payments and premium collection, which I know is a headache for many insurers. They have an established communications channel, and probably most importantly, they're a trusted brand, and individuals are often sending money through the remittance service provider. So there's a bit of decision proximity and frequent use there. On the remittance service provider side, it's obviously distributing insurance products through their platform would allow them to diversify the revenue stream, increase the value and frequency of remittance transactions, potentially even expand their customer base, and actually serve as a value proposition over their competitors. So I think it's quite clear that there are clear incentives for both sides of the equation, both the remittance service provider and the insurer. So I know that I touched on a few examples of these products previously, and Michal will also speak to them a bit later on. But the point is there weren't actually that many examples on there. It was about 4 or 5. So I just wanted to speak through how these products would work practically and why we don't see more of them yet. And I think we'll also touch on this in the discussion component of this webinar as well. So through our research with FSD Africa, we identify, and through many conversations with insurers and remittance service providers and regulators, we've identified 4 different models of what we are calling remittance-linked insurance products. When thinking through the models, there's really 2 key questions to consider. So whose risks are covered? Is it the sender or the receiver? And in which jurisdiction is the underwriter based? Is it based in the sending country or the receiving country? So taking these 2 questions into consideration, we've identified 4 different models. And I'll give you a bit of insight into which of these 2 models are most intriguing and appealing to both the remittance service providers and the insurers. But model 1 is actually the simplest of the models, which is where you would cover the sender risks with an underwriter in the sending country. So this would cover risk events like health, hospitalization, personal accident. It could be anything that covers the sender, and the underwriter is based in the sending country. The part of the, in this instance, the remittance service provider would sell the insurance product and collect the premiums. It would be actually quite simple. Where you could utilize the remittance service provider more is actually on the claims payment. So if it was a life insurance policy, you could design it so the claim was paid out via the remittance service provider directly to a beneficiary in the receiving country. Additionally, you could also structure it so instead of the claims payment, even if it was a personal accident policy or something, instead of the claims payment going directly to the sender, you could also make it so it was structured in a way that it was kind of a sustained remittance despite a shock happening, and the claims payment is actually made to the beneficiary in the receiving country as well. And these are the types of products, model 1 is the types of products that we see on the market now. Model 2 is a bit more complicated. It's what we deem duty of support. So this is where you cover the sender's duty of support risk. And this is a risk that the senders have, which relates back to the fact that when a remittance receiver faces a risk event, they actually oftentimes call on individuals and the migrants in the other countries to send money back to cover that risk event. And we're saying that this is, we're arguing that this is their duty, it's the duty of support to senders to have to send this money when receivers face a risk event. So all of this happens within the sending country as well. It's just around the question of what is an insurable risk? Can you actually deem this the sender's duty of support to send money to remittance receivers as an insurable risk or not? Model 3, which is where we're starting to get a bit more complicated in terms of particularly around regulation, is where you would cover the receiver's risks with an underwriter in the receiving country. What's innovative about this type of policy is that you would actually be utilizing the remittance service provider in the sending country to help market and sell the policy to the sender, but it does cover the policyholder and the beneficiary is actually the receiver, and you would utilize the remittance service provider to collect the premiums from the sender and send them to the insurer. And on my next slide, I'll talk you through what are a few of the regulatory questions are that relate to this product and make it a little bit complicated. And then the 4th model, which is by far the most complicated one that we put out here, again, in terms of regulation, is really about covering the household unit risks with a single underwriter in either the sending or receiving country. So this takes into consideration the fact that many families are living across multiple jurisdictions and sometimes move from place to place. So how can you create a policy which covers household unit risks with a single policy and makes it more seamless for the senders and the receivers? And like I said, the models that are the most interesting in terms of our discussions with insurers and remittance service providers is really model 1, where you cover the sender risks with an underwriter in the sending country, as well as model 3, where you cover the receiver's risks with an underwriter in the receiving country, with model 1 being the easiest to implement as of right now with regards to regulation. So this is my last slide before I hand back over to Craig. But I just wanted to touch on the fact that, as I stated above, there are several products on the market that already cover sender risks, but there's actually a very limited number of them. And I know later in the discussion, the other panelists will speak you through kind of how long this took and what barriers and hurdles they had to overcome. But there are definitely some clear barriers to these types of products. The first is around partnership complexity. Obviously, this only works if you get a remittance service provider partner on board. You can't offer these products without a partnership. And I think a really important thing to flag here is that in our consumer research with remittance senders around this type of product, it became really clear that they would see this type of product as a product of the remittance service provider, not the insurer. So there's quite a bit of complexity in ensuring that the remittance service provider is bought in and feels like the products being offered are really meeting the needs of their customers. That's the first component, and obviously there's questions around once you get a partner on board, how do you integrate operational tech, etc. All of those things that go along with having a partnership. I think there's also a lot of regulatory uncertainty, and this is just around the fact that I don't think a lot of insurance or payments regulation was written with these types of products in mind. That means that a lot of the questions that you need to ask regulation actually cannot be found. The answers cannot be found within regulation because it doesn't really cover this. So this leaves a bit of uncertainty of what is and isn't possible. And also because there's very little precedent about these types of products on the market so far, that there's a lot of uncertainty, which kind of makes institutions, particularly insurers, concerned about these types of products and not really willing to invest the time or effort into seeing how they can make them work. I also have regulatory gray areas that's very similar to the regulatory uncertainty, where this just falls, it's unclear whether it's a yes or a no within regulation and what is and isn't permitted to terms of these products. And then on regulatory barriers, there are actually some, and I think that we'll speak through this in the Q&A at the end, but there's definitely some clear regulatory barriers which would prohibit these products from working, particularly when you're talking about the third model and the fourth model, where you're covering either the receiver's risks or you're covering household unit risks. And I think I just wanted to end with some of the key regulatory themes that are very important to consider when you think about these products. And I think it's really important to highlight that it's not just insurance regulation that you would look at. You would need to look at payments regulation, AML/CFT regulation, electronic communications, communication as well. So you're looking at lots of regulation and adding them all up. So this type of product, although it would be approved by an insurance regulator, actually falls across many different regulators, mandates, and legislation. And I think that's something that's quite important to highlight. And then just to quickly talk you through some of the regulatory themes that one would need to consider is jurisdictional questions. So can you underwrite across borders? Can you market, communicate, and sell insurance products across borders? So for instance, can an RSP that is licensed in the UK sell an insurance product which is underwritten, for instance, by an insurer in Nigeria? Then there are questions around cross-border payments. So can, for instance, an MTO, and I mean, I think that's another thing that's important to note is that not all RSPs are licensed as the same category, which means that the types of transactions that they're able to, and permitted to do differ per jurisdiction. And in some jurisdictions, you might find that money transfer operators, such as like a WorldRemit or a Makuru, might not actually be able to make person-to-business transactions or business-to-person transactions. So there are some clear barriers around that, particularly when it comes to premium collection and payment across borders and claims payment across borders. Same goes for intermediation and selling and collecting premiums. That again speaks to my point around whether RSPs can sell foreign insurance products, and you can flip it the other way. So can a foreign RSP sell a local insurance product? So you take it from both sides of the regulation. Obviously, questions around customer due diligence. So would an insurer need to collect additional information than what a remittance service provider collects on their customers? And I think that's somewhat of a regulatory barrier, but also an operational one, because if it's the requirements are higher for insurers, that obviously puts more onus on the remittance service provider because they wouldn't already have that information. Then questions around digitization, so e-signatures. So can you conclude insurance contracts with an electronic signature? Things around data protection and sharing. Also insurable risk. So how do you define an insurable risk? Can a sender's duty of support be defined as an insurable risk? Group policy holding, so that's quite simple. Can remittance service providers act as a group policy holder for insurance products? Obviously, that's not the only way you can go, but if that's the way that the insurer would like to work, that's a very important question. And then bundling, so can insurance products be bundled with other financial services? In this instance, it would be payments services. So these are just a few of the regulatory themes that insurers and remittance service providers are faced or forced to look at when thinking about these different types of products. And I think that it's no easy feat, but it can definitely be done. And I think it'll be great to hear from the other panelists how they've overcome some of these barriers and launch products in specific corridors. So with that, let me hand back over to you, Craig.
Thanks, Kate. Well done. Great overview of all the complexity and highlighting many of the challenges, but also the opportunities that are there. And so let's shift gears to Mikhail from AXA, who is trying to seize on these opportunities and hear what sort of experiences they've had. Mikhail?
Great. Thanks so much, Craig. Hello, everyone. Nice to be here. It'd be much better to be in Jamaica, but still, it's great to have this conference. So thanks for the organizers. So I work for AXA Emerging Customers. We are a financial inclusion arm of AXA, and we help AXA entities in emerging markets, in more than 10 markets at the moment, to develop inclusive insurance products. As a team, we have been working on remittance-linked and other migrant worker solutions since the last 3 years. So I'm quite happy to share what we have. Let me just. Okay, what I will do today, I will just give you a quick overview and then try to anchor this discussion in what we're learning from customers, from the migrant workers, showcase 2 examples, one in Malaysia and one in UAE, and wrap up with some main lessons so far. I mean, the main lesson is that we thought it would be much easier. Kate really set the stage very well. I mean, migrant workers, in theory, they should be much more receptive to insurance than any other low-income person in their kind of home country. But there are some specific distribution and regulation issues that Kate outlined very well, that make this business quite challenging. And besides that, there are also some usual kind of demand issues that we're facing anywhere in the world when we try to insure a person who never had insurance before. Despite these challenges, we at AXA, we are currently insuring more than 200,000 migrant workers globally. There are a key segment in the AXA's emerging customer strategy, and again, Kate outlined why this is should be more attractive than any other inclusive insurance business. What we have in the portfolio, we have a mix of things. So we are the main underwriter for a mandatory scheme for agency hired workers, overseas workers in the Philippines. So this is the transaction kind of happening really before the migrant workers leave the country and go to the host country. We have schemes with some leading money transfer operators, with Western Union in France, with Merchant Trade in Malaysia, and with Hello Paisa in UAE. And we also started partnering with some fintechs, and we have a live scheme with Rise in UAE. It's also a mix of things in terms of business models. So we run both freemium models. We have also voluntary opt-in. We have mandatory, and it's a mix of online, offline, phygital, combined physical and digital distribution. So nice, definitely a nice mix for us to learn, and I can assure you that we're learning every day. And many new exciting things in the pipeline. So hopefully next time we share in a couple of years, then we'll have much more to share in this space. Let's talk about let's hear from the consumers. So this is Dalan, one of the factory workers who we met when we were doing our consumer insights projects before launching the scheme in Malaysia. Dalan had a really kind of relatively minor accident. He broke his leg in an accident after work. As this was after work, he was not covered by the usual kind of mandatory workers' compensation scheme in Malaysia. He spent out of pocket around 300 ringgit on treatment and lost 6 weeks of salary. He was in a more informal setup, so basically no work, no salary. So he has not been paid for those 6 weeks. So in total, it's close to 3,000 ringgit, which is more or less 600 euros that he lost. What's really important is that, it's even for all of us participating in this conference today, it will be really hard to find an equivalent of 2 months of the salary. So that's a big lump sum for everyone, and that's definitely a big lump sum for Dalan. As he had no income during this time, he needed to borrow to survive. So he has not got heavily over indebted, but he still needed to borrow. And what's really important that he was not able to send money for money home for at least 3 months. And just to be clear, I mean, we talked to many migrants in many places. Most of the migrant workers, they will be sending money almost every month, and they will be sending 70 to 90% of the salary they're getting. So the moment that they can send money, it's really very difficult for them. So I mean, in all our work on this remittance link solutions, I think we kind of focus on, let's say, 2 main situations. One is exactly what happened to Dalan. So they really feel bad if they can't send money home because these families really depend on them. You see some statistics here. When we've done our surveys in UAE, it concerned 21% of migrants in a given year that they had situation that they couldn't send money home. So it's happening. I mean, the risk is really kind of top of mind for all of them. And the main reasons for this was sickness, accidents, as well as delayed salaries and loss of a job. And the second risk is about the situations when something happens at home in their own country, and their families basically ask them to send ad hoc remittances. And this is also very, very frequent. To be honest, it happens almost every year. In Malaysia, when we were doing our studies, it concerns half of the population of migrants. They had this kind of situation over the last 12 months. And it's mostly about health expenses. It's also education fees, and it's also damage due to natural disasters. I think one thing to highlight, and I won't go into details here, is that even if all those migrant workers, and there are like 250 million of them at least globally, and they're really concentrated in key markets like US, Gulf area, Europe, and some Asian countries like Malaysia, Singapore, Hong Kong, China as well at the moment, Thailand, that they look kind of similar on World Bank spreadsheets, but in fact, they much different in each of these contexts, and there are lots of sub-segments. So I think one-size-fits-all propositions are important to launch something, but I think, as we learn, we try to develop something that are more specific for these segments. You see quite a good example here. This is a risk ranking, so a very simple question: what you worry the most? For UAE migrant workers and for migrant workers in Spain, and you see that the ranking, even if these are the same risks, the ranking looks quite different. Surprise, surprise, the setup is much more informal in Spain. So the health expenses are really top of list because these people, they don't really have much social protection in Spain. While in UAE, they automatically enrolled to the national health insurance plan. So the health expenses are not really so important for them. So I think that when we work on these solutions, we really focus on two main value propositions. And so secure your transfers. So this refers to the model number one that Kate outlined. So it's really ensuring the sender, remittance sender, against life, accident, hospitalization risks. So in a way, it's securing the transfer. So if something happened to the migrants, the family will keep getting the transfer for some time, the money transfer. And the second proposition is about protecting the family. So this is the second situation that I just explained. If something happens to their family in the home country, it would be nice if they have an option basically also to buy insurance to protect against at least some of these risks. Yeah. So secure your transfers. So this is most of our portfolio at the moment. Protect your family. We will be launching some schemes early next year because it's much more complicated from the regulatory perspective, but we're almost there. Very quickly, two cases. So that's the first one that we launched with Merchant Trade in Malaysia. Merchant Trade is the largest money transfer operator in Malaysia, and they're getting even bigger because they just acquired another one. So what we launched with, and maybe just a few words about Merchant Trade. They're very good organization, and they're quite sophisticated in terms of the channels. They will have their own branches. They have more than 80 of their own branches. They will also have now more than kind of 2,000 agents that are using their money transfer services. And then they will also have a mobile money app. So they also have digital channels that they use to communicate with their customers. And it's huge, you know, as many of these money transfer operators, they will do almost 500,000 transactions per month. The product that we launched with them is a very simple personal accident product. So I will get into the cover and explain the cover in a minute. And we got quite a good traction, and I'll explain why in a minute. So within the first 6 months of the soft launch in May 2019, we sold to 2,000 policies, and it's a purely voluntary opt-in. It's like, looks like bank assurance. You go to the teller, you do your transaction, and there's a cross-sell. They tell you that you also can buy insurance. Few more details about the products. We are quite proud about this case because through various kind of iterations of the products, because we've been more than 2 years now, and we had several iterations to the product, and we also launched the second product. We managed really to show value and further fuel awareness about insurance among these populations, because we paid over 300 claims over the last 2 years. And that's, I mean, as we all know, that's really key to inclusive insurance, to show value that it works. And it's really quite powerful with the migrant workers, because they, besides domestic workers, all other migrant workers, they will live together in the dorms, in the labor camps. So if it works for one person, then probably, you know, quite hundreds of people around him will or her will hear about it. You see, the first product is a quite simple personal accident product. It's accidental death, permanent disability. It has accidental hospital cash, and it costs 5 ringgit per month per insured, which is around €1. We realized quite quickly that we were not getting much traction just with this one. Over the first few months, there were not so many claims, even if we had this hospital cash cover. But then we decided to add this temporary disablement allowance, which is basically medical leave insurance. So if you have a medical certificate from a doctor, then you will also get a benefit. It works in the same way as hospicash, basically. So if I am sick for 5 days and I need to be sick for more than 5 days, every 5 days I will be getting 100 ringgit. Yeah, and so this is exactly when we saw the huge increase of claims, and we saw a huge increase of interest in these products. And if you take the case of Dalan, I mean, Dalan lost more or less 3,000 ringgit 6 weeks without employment. If he had this policy and paid 5 ringgit per month, he would get 600 ringgit. So 600 and 3,000, of course, we are not covering the full risk, but that's the philosophy of inclusive insurance. If you want to make it affordable, you need to be partial. You can't really cover the entire risk, but 600 ringgit for Dalan, it will really go a long way for him. So he wouldn't need to borrow, and he would have at least some income, and he probably would also send some of this income home to their families. Then the second product we launched, that was the feedback that we were getting. We all know why we're launching accident products to start with, because they're the most affordable and they're probably the most straightforward. But I think at the end of the day, we are also getting quite many claims that were not eligible, and we were of course paying them ex gratia. But just to give you an example of, let's say, dengue, it's an accident in people's minds, but it's not an accident according to the insurance policy. We included it in the first product, in the accidental product, but then we just thought, okay, let's launch second product, which will be double the price, 10 ringgit, which will also include sickness. So this is the second product that you see on the right-hand side. So it's a real income replacement. So no matter if this is an accident or a normal sickness, you will still get paid if you hospitalize or if you get a sick leave. So so that's the product journey. I think it's quite important, to be honest, for migrant workers, because quite often they're very intimidated. They can't really access the healthcare. So having a solution, so even if they have an accident, they might not get hospitalized. So having this temporary disability cover really changed the game for us. Still, I've been talking to migrants for the last, to low-income people for the last 20 years about risk and insurance. So it's nothing new, but we invested a lot in marketing, because we realized for many of these people, this will be the first time they really have insurance, especially for South Asians. So we invested a lot in this. So you can see what we've done here. We also used both kind of more traditional ways like leaflets, banners, but we also invested in kind of local influencers that were hired from those migrant communities. We call them insurance friends. Their role was not to sell, but their role was to kind of educate people about it and amplify some of the testimonials that we've been using as we were getting the claims. So that's really powerful. That's not the cheapest way you can do marketing, but I think it's an important in the beginning when you want to create the market. The other piece that is not here that was really quite challenging was training the tellers. So money transfer operators, they're not banks. So the tellers, they were trained to do the money transfer transaction, but they have kind of lower capabilities to cross-sell for sure. and they probably knew about insurance as much as the end users. So I think we invested in both face-to-face, but also digital platforms to keep training them. And we also added one more thing, and we kind of, as emerging customers, are doing it across the board, especially now with the COVID outbreak everywhere and people having really hard time to access healthcare. We launched a telemedicine pilot, and it also got quite positive feedback from people. So basically, all the migrants had access to unlimited teleconsultations in their own language, with the doctors speaking Bengali, with the doctors speaking Urdu, their own languages. And also this service was extended to their families at home. So that was a bit in the spirit of this kind of cross-border remittance-linked migrant workers solution. So that's quite powerful, and I think that's also our ambition, to create those kind of health ecosystems for migrant workers as well, because as I said already, they really intimidated to use local healthcare, and quite often they can't really talk to the doctor in the local language. They need to go somewhere, and quite often they just postponing care, so they're not using it at all. So this makes a huge difference. So with all these efforts that we've done, still, I mean, what I mentioned in the beginning of the presentation, the demand challenges are the same. You're still trying to sell insurance to someone who never had it and barely understands the concept, and people will have 100 other priorities rather than buying insurance. So it's really, it's an effort to get them, and it's an effort to make sure that they keep renewing, especially in this kind of voluntary opt-in setup. And even if the migrants, they use merchant trade quite often, but they also shop around. So it's not that they will use merchant trade every other month. The small change in forex between the two players can make them to go to the other provider. So so that's tricky. So we, I mean, I was really, it's a bit heartbreaking, but after like 6-8 months of this scheme, when we were still kind of going around the branches and talking to people, we still were hearing the kind of comments, I mean, you should, from the migrant workers, you should just give us a break. We're coming here to send money home. I mean, if you kept selling us all these other things, and then we'll just go to the competition. So there's a really fine balance. I think we went into this a big way, but I think it's a really kind of long-term game, and I think this marketing should be ongoing and well balanced between the core business of the money transfer operator and the new product and a complicated product as insurances. Very quickly, the second case, because it's quite a different case, I wanted to highlight it. I know that we're talking here about remittance linked. This is not linked to remittance, in fact, but there are more and more fintechs and other players that are serving migrant workers. So they also good distribution opportunities for insurance who want to play in this space. RISE is based in UAE. They operate an engagement Facebook platform for Filipino mates. They have more than 100,000 people engaged with this platform, and they pair finance education, personal finance education with financial services. They basically open bank accounts for Filipino mates and also give them some skill building trainings and financial education, which is really quite unique. I mean, there are some other players like this in UAE, but UAE is unique because you need to earn at least 4,000 dirham to open a bank account, and all this, the migrant workers, they will earn like 1,500 dirham, so none of them are banked in the host country. So it's really tricky. And what we launched, so RISE, they basically mostly use digital channels, but they're quite well embedded in the Filipino community in UAE. We launched a very simple personal assistant as a reward for opening bank accounts. It was paid by RISE, so free to consumer, and it included accidental death and total disability. So if you open a bank account, you get a free insurance. We got like 50-60% conversion rate on it. And then we started upselling a more kind of comprehensive personal accident product, also with partial disability, with some medical expenses, accidental medical expenses, and body repatriation. And we got, I mean, I think Michaela will talk more about the numbers, but we got really quite good conversion on it. So 30% of the freemium customers, they converted and they bought the product, which, to be honest, never happens. Yeah, I mean, we all know how hard it is to sell voluntary opt-in. So I think the strategy with the freemium worked for us in the case of Rise, but the only reason it worked is that Rise, they're really very close to the community and they're very strong on marketing. So what they designed for marketing is like a best practice that you can imagine. So they use multiple channels basically to get the same message across, and they have various ways to close the sale as well. So you see it here on the slide. You will see some examples. So basically they run a competition. So they ask people to say why, you know, people should get insured, and then there was a lucky draw. Some people who participated in this contest, they won this kind of more comprehensive personal accident product. It was very well framed as 1 year salary, and lots of noise around it on their Facebook page. Really, people participated very well, and this is like a very powerful, because this is your peers talking about insurance and highlighting the value of it. And we've also added telemedicine, and it worked also very well as a kind of free incentive to buy insurance. And we continued with lots of testimonials. I have not mentioned it for merchant trade, but we do it across the board. And of course, lots of Facebook Live events, also with some AXA guys who were talking about insurance and about insurance concepts. What are the other products? And the participation in these events was really quite good. So let me just wrap up very quickly. So the key lessons so far. I mean, nothing new probably for many people on participating who are active in this space for some time, but I think we find it really important to make insurance as tangible as possible, and we really talking about immediate client value. And when you have this kind of medical sick leave insurance, this temporary disability, as we have with merchant trade, that's very frequent, and it's really showing value. And with word of mouth marketing with migrants, it works very well. And telemedicine is another promise. So too early to share the results, but we believe that we can provide quite good value at a low cost, and we can be this kind of digital window to healthcare for migrant workers as well. The second point, I don't think I should explore. I should explore more here. I think it's really important to be consistent in marketing and keep going with it, because this behavior change doesn't happen overnight, and the renewals are tricky, as in any other kind of inclusive insurance business. So I think you really need to partner with partners who are really tactical and want to keep going with you for several years. I have not talked about customer journeys, and the reason for it is that Michaela will expand on it. We have a global strategic partnership as AXA Emerging Customers with Democrats and Life in many countries already, but we also work on some of those migrant schemes together. And I think it's obvious that, you know, without a partner like Democrats, without really a good IT, both front end and back end, it's really hard to run it. We had some schemes that we didn't have really a strong tech solution, and we were losing 95% of people during an enrollment process. So it's really heartbreaking because it takes a lot of time to work on it. And if you don't have this solution, it's really hard to make it work. I can explain, if we still have time, I can expand a bit more about, pros and cons of both remittance and not non-remittance models, because at the end of the day, we're talking about serving migrant workers and improving the protection for them and their families. And I think there are money transfer operators, they have some advantages. So they have scale, they have trust for sure, but they not like the champions of cross-selling. They really focus on their product, and it's coming, but it's not so easy to get them basically to sell voluntary opt-in products compared to some other models like MFIs or banks. And regulation, Kate mentioned it. Let me just. I think there are lots of issues there. There are less issues with the first model when you have the AXA Gulf insuring someone in UAE. But still, in many jurisdictions, money transfer operators, they don't have a license and are not allowed by the respective central banks to sell insurance. That was the case, in fact, in Malaysia. And I would like to say that Bank Negara was just amazing, and they got the exemption for merchant trade to sell it, to work on it. But there are not some. It's not really the case in other jurisdictions, especially in developed markets, because the financial inclusion is not as high on the agenda of those regulators. And that's a very simple tweak, in the name of financial inclusion. You should allow also money transfer operators to sell simple products and lower the agent licensing requirements. The second model on, insuring family at home, I think we find a model there, but still the customer journeys are not ideal. And the main issue is that, let's say, AXA Philippines is not admitted to the UAE market to promote their products. So the local insurers, they can't really play the game in the host countries. So that's a bigger change to make probably. But again, I think it's not a big risk for regulators to at least give a sandbox to allow people to explore these options, because that's another market that's really quite huge. Sorry for taking so much time, Craig. I had too many slides as always. We'll be happy to answer any questions, and thanks for your attention.
Thank you, Michal. Nice job. Pulled together lots of really interesting insights and real tangible examples, which is fascinating. As Michal explained, in order for this to work from the insurer's perspective, they need to have a partner on the ground who really knows the customers well. So we're going to shift gears now and bring in Michele Grosso from Democrats to talk about his experiences on the ground as the FinTech partner.
Hello, everyone, and thank you, Craig, and the conference organizers for having me today on this panel. My name is Michele, and I am the CEO of Democrats. After the insights that we have just heard from Kate on business models and regulation, and the learnings from Michal and AXA's experience on the field, I'd like to focus a bit on how technology enables successful partnerships, such as remittance. First, I'll tell you a little bit about Democrats. Then I will introduce these two partnerships in the UAE that Michal just mentioned. And finally, we will conclude with examples of customer experience and insights. Democrats is an insurtech player for emerging markets. We were born in Dubai in 2015, and since then we have expanded into 12 markets in the Middle East and Africa, Southeast Asia, and Latin America. We work with insurers such as AXA, AIG, and MetLife to help them increase their digital sales and access new customer segments. And we do that using our software as a service platform, which comprehends a fully automated backend where insurers can configure product and track campaigns, and different front-end customer journeys where customers can buy, pay for, use, and claim for insurance. It's extremely important, as Mikhail just said, to have these two components working together. Because here we're talking about hundreds of thousands of policies that are really small and that have a very limited coverage in terms of money and time too. In terms of product, we work across the life, P&C, and health spectrum. We manage individual and group policies, pre-underwritten products, or products with automated underwriting, all the way from microinsurance for a few cents a month to high-ticket commercial insurance ones. Our platform enables traditional insurance channels such as agents and brokers to go digital, but also helps insurers sell online directly on the website or via distribution partners. And this is what is most pertinent for inclusive insurance. We have experience working with telcos, e-commerce, super apps, microfinance institutions, digital wallets, kiosk networks, and remittances. On remittances, we started our journey 4 years back together with IFAD and ADA. And as part of this project, we just finalized these two pilots with AXA, which this video will briefly introduce. In case the video and audio quality is not great, the network team is sharing a link on the Zoom chat to view it later.
Every year, over 200 million migrants around the world send in excess of $500 billion to their families back home in developing countries. These funds guarantee access to basic daily needs, such as health services and education, and the hope of a better future for their children. The current health crisis and its impact on employment and reduction in remittances has not only confirmed the crucial importance of these flows, but also highlighted their vulnerability. But the realities of these migrant workers are not measured in the millions being sent around the world, but on the $300 being sent home on a regular basis.
I'm Marvin Lutaya. I'm from Uganda. The funds that I send back home, I used to pay for my sister's education. They're all under me, so I have to fund their education as well. I have a sick mom, and my dad is getting old, so that's a responsibility for me as well. Due to this pandemic, no one knows what will happen. But the fact that I've got insurance with me, I'm at ease. I'm at peace. Life moves on smoothly. I will definitely come back to use Hello Pesa to send money back home, because definitely in 15 minutes they have the money. By the click of the hand, they have the money on their mobile phone. So it's easy for me, and I love their services. I want my family to stay strong. Due to this pandemic we're in, I'll do everything I can in my possible ways to send them back money, to keep them funded, to keep them going on. They'll be having a better life, they'll be happy, and I'll also be happy when they're happy, and I'm fine. I want them to be fine.
Marvin is not alone in his work. According to a study in 2018 made in the UAE, not being able to send money back home was the most cited concern among the participants. Simple insurance products such as personal accident, life, healthcare can alleviate easily this concern. However, the problem is not the insurance product, but the ability to educate and engage with the clients during the distribution of them. Today, our partners, RISE and Hello Paisa, are playing a very important role of this. Educating the clients on the benefits of having this type of insurance is key. During these difficult times, we have also added the teleconsultation as a benefit, so that our insurers can receive a medical consultation from their homes by just using their mobile phones.
My name is Laarni. I'm very happy that I'm covered by this insurance, especially this is happening right now, like we have the coronavirus, these uncertain times. We don't know what's going to happen to us. So it's very important we're sending regularly money to the Philippines to our loved ones. I would like to tell for my two boys that they don't have to worry about me here. I'm safe, I'm protected with the insurance. So I'll be sending regularly money to them. Subscribing is so easy. It's just in the mobile application, and I'll definitely gonna buy this one for my family back home.
Looking at ways to overcome these barriers, IFAD extended a grant to ADA, an inclusive finance NGO that partnered with Demogrants to provide insurance to migrants in the Gulf and their families back home via remittance channels. In the UAE, we have worked with money transfer operator Hello Paisa, inclusive fintech Rise, and insurance powerhouse AXA to create simple and cost-effective ways to allow migrant workers to access insurance and redeem claims simply using their mobile phones. Thanks to the power of technology, we have been able to provide affordable and accessible insurance to migrant workers in the UAE and their families back home.
The stories we've just heard are only a few among the millions of migrants around the world, supporting families and entire economies back in their home countries. The UAE is one of the largest remittance sending countries in the world. Through meaningful partnerships such as these, we can work towards closing the protection gap and create accessible financial products to form an ecosystem that supports financial inclusion.
This slide is now showing the role of each one of the player. The distribution is in charge of promoting the product. Okay. There's some noise. Yes, now it's better. So the distribution is in charge of promoting the product. The subscription happens directly on the customer mobile phone, which is also used to access the policy documents and pay the premium. The beneficiary receives the policy information as well as completes the claims journey on her phone too. Our platform backend is then in charge of campaign management, policy, premium, and claims administration on behalf of the insurance company. If we focus a little bit now on Hello Paisa, Michal spoke about Rise. The model with Hello Paisa is a bit different. For those of you who don't know them, Hello Paisa is a money transfer organization from South Africa, which here in the UAE leverages on a network of brick and mortar remittance branches. And in order to make the remittance customers aware of the freemium insurance campaigns, we use the combination of online and offline campaigns to increase awareness. The offline include the banners, flyers, and giveaways at the branches. But we have also used social media. And this is an example of a social media campaign we have run with Pakistani influencer Pulu, who has more than 6 million followers on TikTok.
अस्सलामुअलैकुम माजी जी माजी वो 5-7 दिन तो हो गए मैंने पैसे भेजे अभी तक नहीं मिला मुझे क्या पता इस चीज का मैं चेक करता हूँ माजी चेक करता हूँ माजी भाई क्या हुआ, क्यों परेशान बैठे हो? भाई 5-7 दिन हो गए, घर पैसे भेजे मैंने, अभी तक उनको मिले नहीं यार। भाई इसमें परेशान होने वाली कोई बात नहीं, आप हेलो पैसा से पैसे भेजें, बहुत अच्छी सर्विस है, किसी भी बैंक से आप जाके ले सकते हैं, आप 5 मिनट के अंदर अंदर, और 1 महीने की साथ में फ्री में इंश्योरेंस। नहीं यार भाई, हेलो पैसा, हाँ हेलो पैसा से आप पैसा नेक्स्ट टाइम मैं भाईजान, बड़ी मेहरबानी, शुक्रिया, मैं नेक्स्ट टाइम हेलो पैसे से ही पैसे भेज, हाँ बड़ी मेहरबानी, थैंक यू।
If we look at the customer journey of Hello Protect, the freemium product of Hello Paisa, this is very easy. Whenever a customer transfers money using Hello Paisa at one of their partner remittance houses, the policy is activated immediately. The sender becomes the insured and the receiver the beneficiary of the policy. They both receive some SMS. The customer with the policy documentation, as well as reminders to keep remitting with Hello Paisa to keep the policy active, and the beneficiary receives information on how to claim. At the time of claim, the beneficiary just needs their phone to raise a claim, filling in some information and uploading a few pictures. The claim team of the insurer receives then in real time on Democrat's backend the claim details, and once approved, another remittance transfer is done by Hello Paisa. It's that simple. The advantage of having a fully digital integrated platform is the possibility to run different campaigns and A/B testing, and then roll out the most successful one. This is even more important in a partnership like remittances, where clearly there is no best practice and almost no experience. It also gives the distribution partners, and we've seen this in several examples, it gives them the confidence to see the campaign data in real time, and it makes them a proactive and engaged partner. And to conclude, here are some insights that we have learned from the Hello Paisa and RISE campaign. If you look at the graphs on the left, migrant workers of Hello Paisa are generally younger males, whereas the domestic workers of RISE are all older females in the 35 to 45 age range. Females between 40 and 45 years old are most likely to purchase an upsell to cover their children. And they are also the ones that renew their policies the most, suggesting new ideas for product development and cross-sell campaigns that focus on female products and products that cover their kids' future. The graph on the right shows that freemium works if it's done well. 32% of RISE customers purchased a paid policy, of which 40% of them upgraded from a free offer. Even more interestingly, the remaining 60% purchased a product directly without having a free product first, which means that launching paid products from the get-go works if the product is of value and relevant to the customer, and if it is endorsed by the distribution partners, which in the case of RISE has a strong affinity with its customers. And I think that's all I wanted to show you today. I look forward to your questions, and if you cannot answer them all, here are my contact details. I know the best Pakistani restaurant in Dubai, so feel free to contact us. Thank you, and over to you, Craig.
So who works in that Pakistani restaurant?
Not myself, not Michal, and not Pullu.
Probably some migrant workers, no?
It's the influencer of the video.
All right. So you've heard now from Kate with a nice overview of the different models and challenges, and then Michal highlighting the insurer's perspective and a variety of examples, well, two main ones, and then Michele talking about it from the fintech angle and how they helped us sort of hold all the things together. And fortunately, Kate in particular, but all of the panelists have been quite productive in answering your questions. So we'll go, I guess, straight to the questions that haven't been answered yet to tackle those here in the session in our remaining 10 minutes or so. And let's just start with a very basic one. We've already covered it a bit already, but just, what types of insurance really could be offered attached to remittances? Or, I mean, maybe thinking about it another way, are there things that obviously couldn't be attached to remittances? So I don't know, Kate, you want to take a stab at that first?
I actually think that Michal might be the best place to answer this.
Michal, over to you.
Yeah.
Yeah, I mean, there are not like 100 options here. I mean, if you want to, basically for the first proposition, when you want to secure the transfer and insure the migrant, I mean, term life, accident, hospital cash, you just need to be really careful what's the current social protection in a given country, what's covered, what's not covered. For example, hospital cash in UAE, we just cover the copay. So the copay is 500 dirham in UAE. So that's why basically it's a very small hospital cash. But in other countries, like in Malaysia, it's a much more kind of comprehensive hospital cash. This temporary disability, I think it's worth looking at for sure. And of course, the main requirement that we're hearing from all the partners and also from the customers is a kind of job loss employment insurance. And I mean, there's no way, with the concentration risk, especially now, but even before COVID, it's really hard to get an insurance company to work on this, especially in the voluntary opt-in manner. Yeah. So that's something that we should consider, because there are probably simple tweaks that you can do with these products and offer really kind of limited cover, but these are difficult products to get to start with. Yeah. And on the kind of receiving end, it's mostly about health insurance. Probably hospital cash can do the trick. In some countries, we're also exploring a more. In Nigeria, for example, we're exploring a more kind of, let's say, traditional but still affordable inpatient health insurance.
Excellent. All right. You raised an interesting comment, and it's come up in a number of the sessions and in a number of the questions around freemium versus paid. And it sounds a little bit, I don't know if I'm trying to create controversy where there isn't one, but maybe Michal and Michele have different views on the value of a freemium model.
To be honest, it would be ideal if money transfer operators wanted to pay for more valuable products, but it won't happen because their margins are quite thin. We know their margins, so I think we use freemium more to basically launch something and make noise and create awareness, and we run it for a few months. So I think, and then we share the costs with the money transfer operator. So it's really even hard to talk about like the claims ratios and the value here, because the value is about really increasing awareness. Yeah, and then we transition quite quickly to other products. But I think you should watch this space because there are lots of innovations going on. There are lots of money transfer operators, especially in Europe, they start acting as banks for migrant workers. So then you can do like embed products within the existing products, like they launching, for example, many of them launching credit cards for migrants or debit cards, payment cards. So I think you can also embed probably some simple insurance in it. So we talk about really simple things because to start something you need to start simple, but there are many other options in terms of business models for the future.
Michele, do you agree with that, or you've got a different experience?
Yeah, so I think that there is no, yes or no answer to freemium works, and I mean, and we have seen it, here in the UAE, like it doesn't matter how crisp, clear, and simple you make the customer journey. An MTO will have a lower affinity with these customers than a distribution partner like Rise. So of course, like the freemium conversion works better for the customers of Rise, who are much closer to their customers than for Hello Paisa.
So a couple other questions. Has anyone seen any agriculture or disaster insurance linked to remittances? It's saying no. Michal's saying.
It's a good question, but that's something to explore, especially in Asia for sure. But then it's also the problem with these cut-nut products. If they're not subsidized, they're a bit too expensive to basically attach it, because when you attach to remittances, it needs to make sense when someone's sending whatever 1,000 ringgit, it can cost up to 10 ringgit max. You can't attach more to this transaction basically.
It has to be super cheap. Okay. From Indira, she wants to know, what are the main requirements to offer insurance to cover the family back home? So this is, most of the examples were covering the migrant worker. So what about covering the family back home? Kate, you want to start with that one?
Well, as I said earlier, from the regulatory perspective, it becomes more challenging because you're talking about using an intermediary that is licensed in a different jurisdiction to sell foreign insurance products. So I think the first requirements in terms of this from the regulatory perspective is to engage with the regulators in both the sending and receiving country to figure out whether they would permit this. And in some instances, it actually might require some sort of coordination between the two regulators, because you're talking about entities regulated in two separate jurisdictions. And obviously, as the regulator, if you're approving the product, you want to know that the intermediary is also protecting consumers and there are no issues there. So I think that's the one component to it. And then obviously on the operational side, then you need to figure out how between whether there's a technical service provider, insurer, and a remittance service provider, who will be doing what additional customer due diligence needs to be collected on the family members, because it will be important to keep in mind that the remittance service provider is probably only collecting that type of information on the senders themselves. So there'll be additional kind of operational and technical components that need to be built into this to ensure that all of the information required to make a sale of an insurance product is required. And I'm sure that my other two panelists can add a bit more into this from their perspectives of being the underwriter and the technical service provider involved.
So Michal, do you have any examples where you're covering people back home?
No, not yet, but we've been working on it for some time, which means that it's really quite challenging. It's very challenging on the more like group compliance, and as Kate mentioned and her presentation, there are lots of gray zones. So we also play in the gray zones sometimes, but it's harder for a multinational insurer to basically get a green light from the compliance to play in the gray zones. Some of these gray zones, they can be solved really by a very simple decision by the regulator. They shouldn't be existing, So this will, so it's not a big hurdle, but it's still there, and we internally sometimes we just can't make it work, yeah. So that's it, and I think there are two models here, as Kate mentioned, and we're exploring both. But the model, when you have, for example, AXA Philippines involved to insure Filipino families of the Filipino worker in the Philippines, it's kind of a bit tricky because RISE will need to sell a product that is not underwritten by a non-admitted insurer to the UAE market. We have a way around it, but it would be nice to kind of remove this gray zone, because you can in the name of financial inclusion, and it's very specific to migrant workers. Really, in UAE, you can do something about it, and I think in Europe you should probably also do something about it.
Michele, do you have anything else to add to that? Okay. Michele, there's a softball question here from Bert. He wants to know what percentage of the remittance-linked insurance is a percentage of your total policies in emerging consumers, and how you think it's going to evolve.
No, it's very low, because we're insuring more than 18 million people at the moment all over the world. So we have 200,000. I think it will be growing, but the other stuff is growing as well. So I don't know how this will play out.
Michele, there's a question for you. As a fintech provider, can you give some advice to somebody else who wants to design a business model and customer journey?
Yeah, sure. So we are indeed that technology provider. However, in the end, this is what we do most. So we help insurers, who are newer to this space, to set up this kind of partnerships. And I think that also another thing that came up, it was about our business model. So we are not a broker, we're not an intermediary, we are a software as a service. So and this is even a different model than other technology vendors. So in short, we are much more aligned on insurers' OPEX than CAPEX. So trying to reduce as much as possible the barriers to entry for them if they want to enter in this segment. And in order to make sure that the business case for insurance companies is strong, we encourage them to start using Democrats to digitize their traditional insurance business first, and naturally they will converge to inclusive insurance. And we have an example. The first large client we started to work with 4 years ago now. At the beginning, they told us that they were not interested at all in microinsurance. And 4 years later, they use Democrats platform across their traditional personal and commercial insurance portfolio. However, they have now launched microinsurance campaigns successfully in both Egypt and the UAE. And this is for us a huge success and a proof that there is a business case for microinsurance, and technology is a key enabler for it. When we started 5 years ago, we had the mission of making insurance accessible and affordable to those who need it most via the power of technology. And today we're starting to see these results.
All right, we need to wrap up. I want to thank all of you for your insights and your experiences and everything you've shared with people. I'll just go around the room for the three of you to have any parting comments, any key takeaway that you want to emphasize. And why don't we do it backwards? So we'll start with Michele, and anything that you want to make sure people take away?
Yeah, so we speak to lots of insurers who are, let's say, less advanced than ICII emerging customers on this, and they're very scared to try something like this. And what I would like to tell them is, yes, it is complicated. However, give it a try. If you don't give it a try, it will not happen. And there are huge benefits to to do this. So don't be shy.
Give it a try, don't be shy. All right, it rhymes even. Michele.
I don't have everything. I think I said everything, but I mean, there's definitely a market. I think you need to be in this in the long term because you will face all the usual issues. And this is cross-border, so it's a bit more tricky. So I think you really need to be on both sides, and you need to use both digital and physical. You know, there's no way. You need to create the market.
Okay, that was a lot of different things.
Summarize
that. Don't be shy, give it a try, be patient, be in there for the long term, and think about technology and in person. Yeah, okay, that was summarizing the key recommendations so far. Kate?
Now I feel like a lot of pressure that what I say has to go along with your jingle.
And it has to rhyme somehow.
But so I can't promise I'm going to make it easy on you, but I think it's further to Michael and Michelle's point is that I think there's a lot, it's very clear that there's a lot of potential here. You know, one of the things that really struck me from the consumer research that we did with Cinders was just that 21% of people we surveyed, I realize it's only 1,200 people, but we're already sending for insurance purposes. So there's clear demand and there's clearly interested insurers in this. I think that it's also about illustrating the business case to the remittance service provider partners and understanding that it's not going to be a product that's approved in a month. It's going to be something that takes time. It takes integration. In some instances, it takes proactive communication and coordination with the regulators. And I think that's something just to flag that I think that the remittance service providers and the insurers shouldn't be afraid to have these conversations with the regulators around, this is what we want to do. Here are the hurdles that we're facing. You know, what are your thoughts? Because insurance regulators have a mandate to develop markets. And I think that this is a product that develops the market and also adds a lot of consumer value. So I guess be willing to invest the effort for the long-term gains.
Okay, and engage the regulator to do that because you think that it's going to contribute significantly to developing the market because it provides good value. All right, Dirk, we're done. Back to you.
Thank you, Craig. Thank you, Kate. Thank you, Michaela. Thank you, Michal, for this very interesting session. So remittances can be another piece in the puzzle to close the insurance gap. We need to work on that. We have to be patient, and we need to get the regulators in that discussion as well. This is what I learned from that session. So thanks to all of you. And I would like to invite the audience to the next session, which starts in about 30 minutes. And that will discuss insurance for small and medium and micro enterprises. So thank you and see you in the next session. Bye-bye.
Thank you. Bye-bye.